Well, to the stock market now, and it was a day of solid headway, although not fully reflecting the strong close to last week on Wall Street and in Europe. Keeping tabs on trade was Commsec market analyst Tom Piotrowski, and I spoke to him earlier. Tom Piotrowski, a measure of enthusiasm on our market today for the latest developments in Europe, but still a measure of caution. Is that how you saw it?
Well, I think there was one aspect of trade today which really highlighted that for much of the session, and that was that the volumes were extraordinarily low. So that was a little bit of a concern, given the fact that we'd seen such an emphatic reaction on the part of European markets in particular. The US did very well, but local investors still reasonably unwilling to commit to the market under seemingly more optimistic circumstances. But the point to make is that we have seen the way that the Europeans move through this sort of process. They seem to find an accord, then they seem to find issue with it. There's an argument that follows, and eventually they arrive at some type of action. So that's the sort of thing that the market perhaps may have been expecting today. The situation that with the volume has been in place over the course of the last couple of weeks. It's really fallen off precipitously, and that just gives you an indication of how defeated investors feel under the circumstances.
We're looking at some individual stocks now, and Lend-Lease has upgraded its profit guidance. So how did the market take that?
Yeah, they like this news because the markets were expecting a number in terms of the full year to be around 450 million. So to be as high as $505 million was certainly something that was embraced. And also, significantly, it doesn't include any positive outcome in relation to Barangaroo. So the market's certainly responding positively to this in the immediate term, at least.
But not such a good reception for Aristocrat Leisure. What was the market upset about there?
Well, the guidance that was provided in terms of 30 to 33 million for the 6 months to June was higher than the previous corresponding period of 25 million. But clearly the market was looking for a little more than that. And at the same time, they were asking the question, so is the weakness coming from the local gaming outcomes or North America or both? So it's going to be quite eagerly anticipated at the end of the month to get some more clarity in relation to that.
Now, there was a rally in Qantas shares today. Was that because of its latest traffic statistics?
No, actually, because the traffic statistics, if anything, were quite disappointing, perhaps surprising in terms of the weakness on the domestic front. So the question that you would think that would be getting asked is, what sort of risk does this pose to earnings numbers over the next 6 months? So the market didn't seem to be too worried about that today, but it's a question of whether or not that emerges as a concern over the course of coming days.
Well, something to look forward to. Tom Piotrowski, thank you very much for your thoughts.